Let's take a look at job order costing part 2. With product costing systems, we need this in order to set a price for the customer. If I make dog houses and I want to be able to sell my dog houses, I have to be able to determine what price I'm going to charge to the customer. How can I do that when I don't know how much it costs me to make it in the first place? So there are different costing systems that are used to accumulate, track, assign the cost so that we can then know how much each item costs us to make. So for job order costing, or sometimes just called job costing, okay, it's usually there's some kind of customized products or customized services. And so a CPA firm or bookkeeping service would also fall into this. Every single client, their bookkeeping situation is different from every other client. And so we have to have a customized way of knowing how long do the employees of the bookkeeping company spend on each client. Here are some examples of these customized things, including a CPA firm, a builder of custom homes, and a hospital where every patient has a different situation. So we have to have a way of tracking every cost for each separate job. A process costing is usually where we have homogeneous. That means that it's all kind of the same. And it flows along on some kind of continuous basis. And so we're going to accumulate the costs on the different processes that it goes through, or different departments that it goes through. So some examples of something that would use a process costing is an oil refinery, or a paint manufacturer, or beverage manufacturers. And so if we have orange juice we're making, it's all going to go through a pipeline. I don't have a separate orange juice that I'm going to sell to customer A versus customer B. So we could use just a process costing system. We'll learn more about this in Accounting 230. Operations costing is a hybrid of job and process costing. Companies that make large numbers of products that are standardized within a batch, but then could be customized. So clothing manufacturer, automobile manufacturers, and footwear manufacturers. So when GM is making a car, a certain type of car, it's going down the line, they're all the same. Of any particular model is all the same chassis and whatnot. But then when we get into separate features and stuff, each one could have different features on it, and customers can even order their separate color and features that they want on, and there'll be a separate VIN number put on each vehicle. So part of the process is like a process costing, and part is like a job costing. Here are a summary of some costing systems that might be in the 3 types. Now we're going to concentrate on job order costing in part of it's in chapter 2, parts in chapter 4, and we're going to concentrate on this. And your project also is based on job order costing. So to keep track of each job, we have a job cost sheet. It might be called a job cost card, a job cost record, something like that. We'll take a look at one here in a few slides. We're going to have one of these job cost sheets on each custom job, and it's going to show the direct materials, the direct labor, and the overhead we applied to just that job. Okay, when direct materials are issued to job number 101, we're going to debit work in process, like we learned in the previous PowerPoint, but we also have to add that to the job cost sheet for job 101. So this job cost sheet acts like a subsidiary ledger for work in process. So if I add up the final running total balance of all my jobs, it should equal the final running total balance in my work in process account. When direct labor is issued on job 101, again, it's debited to work in process, but it's also added to the job cost sheet. Usually overhead is applied at the end of the month, and when we apply it to job number 1 at the end of the month, we're going to debit work in process. We're also going to add that overhead that we're applying to the job cost sheet. Now here is an example of a job cost sheet. We're going to have the job number on it, when we started the job, when we finished the job, who the customer is, and what it is that we're making, what is in the job. Now in this case, it's one thing, one TV cabinet, okay? And if we had a job that we were making 500 dog houses for Walmart, then that would be, we would show the customers being Walmart, and we'd show 500 dog houses is this job. We wouldn't have a sheet for one dog house. Whatever is that job, whether it's one thing or 500 things or 5,000 things. Now notice that there's direct materials, direct labor, and overhead is on this job cost sheet. The direct materials are all listed. Oftentimes there will also be a date here and the cost of those direct materials that we issued onto this job or used for this job. We also have the direct labor. So we may not necessarily, if this is a small company and only a few employees worked on it, it may be a very large company, in which case we're just going to show the total gross wages for any particular week or date. We also show the total number of direct labor hours that was spent on the job and the total gross wages that we paid for that direct labor. Now, overhead is normally calculated on a predetermined rate. So in the fall of 2021, we will calculate a rate that we're going to use for the entire year of 2022. Okay, so this rate of $12.50 was already calculated last fall. We're going to use it all year. And we're going to take however many hours, direct labor hours, that we used this month, and we're going to multiply it times our predetermined rate, and that gives us the total of overhead that we're applying to this job for this month. Then if we add more direct labor hours next month, then we would have more hours times the rate, and we would have another amount added on here till we're finished with the job. Okay, now this job was started March 6th and it ended March 19th, so it only took us a short time and it was all within the same month. So we only have 1 month's worth of overhead added. Once the job is finished, then we total it up. We get all our totals and we put it in the summary section and get the grand total. Now here is shown the direct materials that we talked about, and they're added into the job cost sheet. And indirect materials are not listed separately, but they're put into the overhead account. And then at the end of the month, we're going to apply overhead. So that $280 includes a certain estimate of indirect materials, as well as indirect labor, as well as depreciation, repairs, insurance, all that other stuff that goes into the overhead account. Okay, for direct labor, we take the wage rate times the number of, this is an average. We might have 200 guys working in the factory, okay? And what is the average wage rate times the number of direct labor hours? And that'll tell us the gross wages. But we also have to include the fringe benefits, such as the employers had to pay for health insurance, dental insurance, retirement plans, and employer-related payroll taxes, such as they got to match the Social Security and pay unemployment taxes. So these kinds of extra things can be 30 to 35% of the base wage that we have to also add into this direct labor. Okay, and again, the direct labor is put onto the job cost sheet, but the indirect labor is part of this $12.50 per hour, part of this $280 total. So here shows an example, some of the different things that go into overhead: indirect materials, indirect labor, repairs and maintenance, rent, insurance on the factory building, etc. All these things become part of manufacturing overhead. Then we have to apply a little piece of overhead to each job. So we have all these unrelated costs that make up the overhead account. Then we have to figure out how are we going to divvy those all out to the various jobs. So we're going to come up with this rate ahead of time, and then that's the rate we'll use. The rate is based on estimates. Okay, so here just talks about the benefits of estimates, because if we didn't use estimates and we had to wait till the end of the year, that would not be good. I need to figure out how much am I going to charge for this thing, so I'm going to have to go forward and use estimates. Now, we also have to figure out, when we're figuring out that rate that we're going to use, that predetermined rate, we need to figure out what causes overhead costs to be incurred. If this is a company where it's run by direct labor of human beings, we're probably going to use direct labor hours. We might use direct labor cost, meaning the dollar gross wages, okay? Or we might use hours. Usually hours is better because it won't go up and down the way the cost will. So if the company is run through labor, usually we'll use direct labor hours. If it's a robotics type of company where machines are making the stuff, we might use machine hours, okay? It's possible that we'll just say, especially if all the units are pretty much similar, we might just say how many units did we produce and use that as our cost driver. We also, if we're the accountant and the manager, we may look at what other things, what causes, what drives the building of this inventory. And in that case, we might use some other base as our cost driver. Now, this predetermined overhead rate, that's calculated using the estimates of the total overhead costs for next year. Usually we'll do it in the fall for the following year. And we're going to estimate the total amount of whatever drives production, the cost driver, whether that's direct labor hours, machine hours, whatever. Okay? So I have two estimates. I got to figure out the total estimated costs of overhead for next year and the total estimated driver. Okay? And so the costs are divided by the driver, and that gives us that predetermined rate. We're going to use that same rate for the whole next year. Okay? Assume that the CCF company, that's the custom furniture company, identifies overhead costs. They think it'll be about $100,000 next year. and they're very labor intensive, so they